How's it going, everybody? It is Dennis, and we're back with another video talking about MAGY or MAGY, the Magnificent 7 covered call ETF from Roundhill ETFs. The reason we're talking about this ETF today is because I personally am invested in this in my portfolio, and also I've been tracking it quite in a detailed way. I've been tracking it for every single share I've purchased, for every single dividend that was earned for that specific share. So everything is being tracked meticulously for this ETF, and I've been doing this for many other ETFs in my portfolio, such as QDTE, such as AMZY, and I'm going to be expanding the ETFs that I'm tracking and the positions I'm tracking, so I have a better understanding in my portfolio of how it's performing, rather than just looking at seeking alpha or generating some kind of result using some kind of generator or calculator. Right? So we're going to be going and taking a look at MAGY. If you don't know what MAGY is, well, it's Roundhill's covered call ETF on their own MAGS ETF or MAGS, which is based off the Magnificent 7. And of course, its distribution rate currently, as of the last distribution, is 33.99%. It distributes around 30% return, which is quite good to see. It's stable. It pays a stable dividend. If we look at distributions, we'll see that in a second, where you can see that the stability is there, right? It pays around the 37, 38, and 36 cent mark. It varies around that area. It did have some moments where it dipped down, but that was towards the beginning of the ETF. And also, this is when it was paying, I'm pretty sure, oh no, actually, it was all paying weekly most of the time. So as you can see, we had this little dip in the beginning of the ETF's time, but since then, it's been paying consistently on the same level, which is very nice to see from MAGY. So let's go ahead and take a look at our spreadsheet, which is the most important part. Firstly, let's look at how long we've been invested into MAGY, and that's roughly 4 months, right? So we have July, August, September, and October. We started off in July with just 12 shares purchased. We held those 12 shares for 2 weeks, and we got $4.52, $4.58. We went up to 14 shares, and we got $5.26. We went up to 39 shares. As you can see, I boosted up the count of shares we had, and we went up to 39 shares and had $15.03. Then in August, we went up to 40 shares and got $15.33. 45 shares where we got $17.64. 48 shares where we got $18.34. 57 shares where we got $21.87. And then we went up to 58 shares where we earned $22.61. We went up to 62 shares where we made $23.56, 63 shares at $23.93, stayed at 63 again and made $24.17. Went up to 67 shares, made $25.49. And then lastly, for October, we had 70 shares where we made $27, 79 shares where we made $29, 88 shares where we made $33, and 91 shares where we made $33.43. As you can see, we're getting very close to getting to triple share count, or $100 and over share count. As you can see, also from week to week, we've increased every single week. We've increased every single month. And that is also because due to addition of shares. But even without addition of shares, MAGY has shown, as you can see on the previous screen, it has shown to have stable distributions and therefore have stable compounding, which allows us to have that week over week greens. And we can see also with July, $29.38 was the total. August was $73.18. September, we jumped up to $119.76, and now we're at $123.42 shares. So let's see how that translates over to our tracking of this ETF when it comes to shares to share for each purchase of shares, each batch purchased. As you can see, we have this huge little sheet where we could track all of the purchases I've made and what has been the total return since then. So how does this work? Well, as you can see, I track the date of purchase of the shares. I track how much I purchased, for how much I purchased, and the value lost since then, and as well as the dividends earned since then. And then I come out to total gain and loss based off share value and total dividends per batch, and then I get the total percent of return. Right? Pretty simple. I do that by, of course, tracking the live price of MAGY. I have my average cost for calculation purposes, and then I also have all the distributions right here, where we can see all the distributions that were received from MAGY, and of course my little calculations that I use for my for finding out what my numbers are. So let's go ahead and go through this really quick. We're going to try and make this as fast as possible. So we started off, as you can see, in June of the 27th. Where we bought our first position of 2 shares for $56.83, and that cost us $113.66. and we're currently down 44 cents on that. We've earned $12.89 in dividends from that, and we're up $12.45 or 10.96%. So after that, we have the 30th. We bought more cash positions, 10 shares, 56.82, 568, $568.20 is how much we invested, and we're down negative $2.10 or 64.46 of dividends earned, or $62.36 of total gain. And that has a 10.98% return. And as you can see, if we keep going down, we can see many of these positions, but I'm going to stick to some of the larger ones. So for example, on the 21st of July, we could see the 13 shares purchased for $57.49 or $747.37. That is currently down negative $11.44 in share value. We've earned $69.06 in total dividends, or $57.62 in total gains, and that's 7.71% return. The same day, we also bought another 9 shares for $517.14. That's down $7.65 in total value. We've earned $47.81 on those 9 shares, and we're up $40.16 in total gain, or 7.77%. If we keep going down, we can see we have some reinvestments, but I did stop reinvesting back into this ETF. So you're not going to see any more reinvestments in this. So let's go ahead and take a look at some other big batch purchases. So we could see in August 4th of 2025, we purchased 4 shares at $56.93, $227.72, and we're down $1.28. And we made $18.19 in dividends, leaving us with a $16.91 total gain, or 7.43%. We had a 9-share purchase on August 18th for $56.95 or $512.55. That's down $3.06. We've made $34.06 in dividends, and we're up $31 in total return, or 6.05%. Also, if you want to pause and take a look at all these purchases, this is all of them right here. So if you want to take a look at them, pause, take a look, zoom in on everything you want to see, you could go and head and do so. But I'm not going to waste your time and read through all these. I'm just going to focus on the major purchases and the ones that show the major information we want to see. Of course, you can see I have one share. This is reinvestments made from YMAX or QDTE into this ETF, because I do run that little strategy where I take YMAX and QDTE share dividends, and I take half of that and put it into MAGY, and then I take MAGY's dividends and I put it into YMAX or QDTE. So that's the little thing, the little recycling or circle reinvestment I run with this ETF. So here in October 3rd, 6th, and 10th, we can see we have a 5-share purchase, 4-share purchase, and a 5.4-share purchase. We have a $56.49 purchase, $56.41 purchase, and a $55.48 purchase. We paid $282.45, $225.64, and $299.59. We made actually 60 cents in gains, 80 cents in value gains, and $6.10 in value gain. And that's $5.60 in dividends, $4.48 in dividends, and $4.01 in dividends, because this is recent in October time. And that's $6.20 total gain, $5.28 total gain, and $10.12 total gain, or a total percent return of 2.19, 2.34, and 3.38. As you can see, we purchased this in the beginning of the month, and we're still in October, and we already have 3 to 2% gains on those shares. So let's go ahead and take a look at what our total return is and how that compares to some. If we take a look at, of course, on Seeking Alpha, how it compares to Seeking Alpha's total return of 24.66%. So let's go ahead and go our way down, and we can see that our total cash investment is $5,171.89. Our value gain / loss is negative $19.20 for all our positions, all our share purchases. We are down negative $19.20. We've received in total $345.79 in dividends so far from MAGY, and our total profit is $326.59, and our total percent return is 6.31%. Of course, our average returns for percentage-wise is 5.7%. I wouldn't pay too much attention for this. This is just an average based off all the shares that we have. But of course, as you saw before, our highest is a 10.98, which we purchased back in June. So a 6.31% total return is very, very far away from the 24.66% that is estimated by Seeking Alpha, or is given to us by Seeking Alpha. The reason being is because, of course, MAGY launched in 4/23 of 2025, or roughly around that time is when the charts are showing, right? So it will launch around April time, so end of April is when it launched, and we only started purchasing back in June time, late June. So we are almost 2 months ahead of, or sorry, 2 months behind on what Seeking Alpha is estimating. But we can also see that we are distributing over a larger time frame, right? We're not purchasing at one single time. We're purchasing over the single many time frames, and therefore our total returns are distributed throughout those time frames. But still, if you take a look at our initial purchases back in June, we can see we're at double digits at 10.96%, 10.98%. They are increasing, right? 9.56%. And the more you go down, all right, let's not move that. The more you go down, the more we head down towards lower numbers, right? And that is because, of course, the less time in the market is less return. With Seeking Alpha, it has more time in the market, therefore it has more return. If we take a look at similar time frames, so what? June, the end of June to October, that's what, 4 months of time, right? Let's say that's like 3 to 4 months of time. So let's say we go from inception, so 5/23, 6/23, and 7/23. Where would 7/23 have a standing? 7/23 would have a standing at 17.23%. Of course, this is a very rough estimate of how we should be in the 3-month time frame. If we go maybe down 1 month, let's say we go to 6/23, I would be at 13.43%, right? Roughly around 13% return. So are we trending a little bit slower than what's estimated by Seeking Alpha? Possibly, yes, obviously. That is because we purchased later into after inception, roughly 3 months after inception. And also because we don't purchase at the times where, Seeking Alpha would imagine you purchasing, right? I'm purchasing shares whenever I'm able to get my dividends from YMAX, whenever I'm getting dividends or options from other ETFs and other option plays, right? When I get that cash in, that's when I'm purchasing this ETF. When I get those dividends in, that's how I'm purchasing these ETFs. So therefore, my returns obviously won't be the same as Seeking Alpha's. And also, they might even be better at some points, right? This 10.96% might actually beat what Seeking Alpha is returning. So if we can make this really simple. I don't know why I'm not doing this. We could go to Seeking Alpha and then go to 6/27/2025. Boom. Actually, yeah, that should work. Yep. So if we look we're actually beating it. Look at that. We're actually beating Seeking Alpha's estimate of total return. Look at that. It's that simple. So we take a look, 6/27/2025, our total percent return is $10.96%, while Seeking Alpha's total percent return is 9.92%. The reason being, maybe this is taking into account for at market open or market close. I could have purchased possibly at a cheaper price than what Seeking Alpha is estimating it to be, and therefore I was able to earn a little bit more or hold a little bit more share value. Or maybe the data is just not updated. It could be many things, but still, we could see that I am beating Seeking Alpha's total percent return with those two that I have. Let's take a look at 6/30, for example. Let's go ahead and go to 6/30. Actually, let's clear this and go to 6/30. What was going to give us for 6/30? 9.71. We're at 10.98. So we're beating Seeking Alpha's total return by 1% with our early purchases. And we could do this for pretty much all of this, right? So let's go ahead and go for our next large batch of purchases. So 7/21 was our next large batch of purchases. If we go to 7/21 right here, boom, it's a 6.41% return, and we're getting, what are we getting? A 7.77 or 7.71% return. So like I said, it depends on when you're purchasing this ETF. And it's depending on what information Seeking Alpha is getting. If it's basing it on open or closed prices, and if it's basing it on something else, or the information's a little out of date, maybe it's not looking for post-market prices. But we are beating it, but you can see by 7.71% and 7.77%, while Seeking Alpha is saying 6.41%. So we're beating it by 1%. For most of our things. Let's do one last test. Let's test one more for August 18th. So go ahead and do this. August 18th. Boom. 4.61% if you purchased on August 18th. And if we take a look at our position, we're up 6%. So we're 1.5% almost higher than what Seeking Alpha is estimating. Could it be that some of my calculation could be skewed? Possibly. I doubt it. My calculations are based on my purchase prices and as well as current market values, right? So current market value, $50.61, $50.61, and then I have all the distributions right here calculated in. So everything should be properly calculated. Total dividends received is correct based off my actual data that I received from Robinhood. So that's all correct. Calculations are correct. So I guess it depends on when this is being calculated and when the total distributions are being calculated and when the reinvestments are being calculated. So as you can see, total percent return is beating what Seeking Alpha shows. So honestly, not a bad ETF. I know this video has been a lot of numbers and it's been all over the place looking at graphs and back, but this ETF has been pretty good. It has demonstrated that it has total percent return and it has good value hold, right? So if we take a look even at that, if we go back to, what was it, the 23rd, right? 423, and then we go to price return rather than total return. We have to go back 423. We can see 6.7% price return for MAGY. So if you were taking all the dividends out of MAGY, so for my example, if I got all my $345.79, if I took all of that out, I would be up 6.7%, assuming I purchased all of it in the beginning or actually I would have had more if I purchased in the beginning because all of this didn't have time to compound. So if I took all these shares purchased at the beginning, maybe I would have been at $500 dividends made. Doesn't really matter. But assume you bought in the beginning of when MAGY came out, you would have made all that dividends, all those $500, $1,000 dividends, how much ever you bought, and you still would have been up 6.7% in value. As you can see, it's kind of leveled out and has been going lower currently. But still, if you go to total return, it's still up, keeping that trend upwards like we saw prior, right? So total percent return is still going upwards of 24.66%, matching the S&P 500. It's pretty impressive for being able to hold its value and even grow value in some cases. Hopefully they're able to continue to grow the value or keep the value steady with MAGY. I know it's best based off MAGS, but MAGS has been performing quite well as well. If you go take a look at MAGS in the same time frame, which is what this ETF is based on, and then we go to total return, and then we go to 423. We could see MAGS is up 47.98%. So could it be said that it's better to invest into MAGS? Yeah, sure, it can be. This is similar to what all the single stock ETFs counter or arguments are that you're better off investing into the underlying rather than the ETF, because the ETF is limiting your upside. But if you're looking for dividends and you're looking for stability, MAGY offers that at a 6% total. You saw a price return and then a 24.66% total return, and you're able to keep getting stable dividends and stable income. And if that's what you're looking for, MAGY is a good investment if you don't care about that upside of 47.98%. And if you do care about the upside of 47.98%, well, theoretically, you could take some of your dividend distributions, since the value of MAGY is not going down, and you could funnel it into MAGS. If you funnel into MAGS, then MAGS is able to give you that upside. So you could do something similar to maybe what Roundhill's ETFs do with their single stocks, right? They do 1.2%, 1.2x exposure, right, or a 1.2x leverage. You could do something similar in style with that for MAGS. So maybe have 20% of your dividends that you earn from MAGY go into MAGS, and then have that set aside, or whatever you want to run. You could do a 50-50 split, so 50% of your MAGY dividends go back into MAGY, and the other 50% go into MAGS, and therefore you're able to capture the upside, right? So many different ways you can run this. This has been explored also by many other people, where they're thinking about taking these dividends that we earn from these high yield ETFs, not only Roundhill but from YieldMax and other ETFs, and taking those dividends and putting it into the actual asset that you're bullish on, because you have to be bullish on these assets. If you're not bullish on the assets, then you shouldn't be invested into them, in my opinion. Not financial advice, because you will not seek the returns you want to have. And this has been proven currently with ULTY, with MISTY, right? People are not bullish on MISTY or MSTR, the underlying. They just are going in for dividend distribution, and therefore they're getting burned when MSTR goes down. And while Bitcoin is going down at a smaller percentage, because MSTR is leveraged to the tits when it comes to Bitcoin. So that is that. So just something for you to explore, just something for you to think about, and just something for you to see. This is the reason for why I'm tracking this myself instead of just using Seeking Alpha or any other platform. It's because I get to see the true total return based on my purchase time, my purchase price, and where my portfolio is currently trending, right? Seeking Alpha is not going to be able to calculate at what time I purchased, for what share price I purchased. Of course, there's other calculators that might be able to do that, but this is the easiest way for me to do so. Every time I buy something, every single week or every single month, I'll go ahead and hop onto this sheet and I'll update it with the most recent information, with dividend distributions and with what shares I've purchased in that month or week time frame. And it's able to give me solid total return percentage on my returns. And as you can see, I'm also doing this for QDTE. QDTE, as you can see, has a lot of purchases, and that one, just a little sneak peek, is at 13.84%. So yeah, that's pretty much it, guys. I will see you guys next week for next week's video. Just a little video showing you guys how MAGY has been performing. I know it was all over the place with us going from Seeking Alpha to the sheets to this sheet to there. But just wanted to demonstrate how MAGY has been in my portfolio. And I've been seeing a lot of people talking about it, so why not just demonstrate on how it's been performing, so people who are looking or interested in this ETF might have a better insight on how it performs in real life, in real terms, for someone who's actually holding it for the past 3 to 4 months. So thank you so much for watching. I will see you guys next video, where we're going to be talking about some other ETF or some other strategy. But anyways, thank you. See you guys later.